Investors in stocks seek guidance. But what the market is saying won't be to your liking. Sell signals have taken the place of the buy indications that first arrived in August. Mid-August saw a rally off the support level of 4,330 in the stock market, as measured by the S&P 500 Index SPX, and things briefly appeared to be looking good. But contrary to what the bulls had hoped, that surge may have simply been an oversold reaction rather than the beginning of a fresh bull market leg. Just above 4,500, resistance formed, and SPX has been falling ever then, sometimes quite steeply. Therefore, it's crucial to watch to see if SPX can overcome that resistance at 4,500, and then break out above the further obstacle at 4,600, or if it will drop below 4,330. Either one should cause SPX to move strongly in one way. The green B on the following SPX chart signifies the continued presence of the McMillan Volatility Band, MVB, buy signal. Although the latest surge attempted to reach the +4 modified Bollinger Band, it was never quite successful. If SPX were to close below the -4 band, which is currently around 4,300 and below the main support stated above, this buy signal would be shut out. Equity-only put/call ratios continue to indicate strong sells. They both moved significantly upward yesterday and are currently at fresh relative highs. They are generally unfavorable for the stock market as long as they remain rising. They won't start to turn bullish until they reverse course and start to trend down. Over the last few trading sessions, breadth has significantly weakened. As a result, sell signals have already been produced to replace the purchase signals that were established on August 28. This short-term indication of hours can occasionally be affected by these whipsaws. The previous sell signal, which started at the beginning of August, lasted for a longer period of time, but this is now more of an anomaly than the rule. In late August, new 52-week highs on the NYSE briefly surpassed new lows in importance. In fact, there were over 100 new highs on one day, and it seemed like this indicator might be prepared to send out a buy signal. That did not occur, and as a result, new lows are once again outpacing new highs. The next signal will not be generated until 2 days in a row with 100 new lows or 100 new highs, but the indicator is still in a neutral state. The aforementioned indications, which we refer to as market internals, provide a pretty bleak picture. The indicators based on the VIX and volatility derivatives work to offset this. The VIX appears to have hit a bottom around the 13.0 level and is probably not going much lower. There is still some market apprehension among the bigger players in the market. However, VIX hasn't increased much more either. The spike peak and trend of the VIX buy signals continue to be valid. The VIX returning to spiking mode, defined as a gain of at least 3.0 points, using closing prices, over any 3-day or shorter time frame, would be the first indication of problems. Finally, the structure of volatility derivatives continues to depict equities as being bullish. The SIBO volatility indices and the VIX futures term structures both continue to incline upward. It would be a highly negative indicator if the price of the front-month September VIX futures rose beyond the price of the October VIX futures, but that hasn't happened yet. So a positive case may be made as long as SPX is above 4,330. Following the collapse of the most recent rally at the 4,500 level, that argument is currently coming under attack. Regardless, we will keep trading verified signals near a core bullish position. BKR had a significant upward move in July before consolidating its gains for the majority of August. With strong stock and option volume patterns, it has now rebroken out to the upside.